Hello and welcome to another Toolbooks tutorial. My name is Samuel Burmeister and I'm the owner here at Toolbooks. Today we continue our Accounting in 5 series, breaking down key accounting concepts in under 5 minutes. If you haven't already, please give us a thumbs up and subscribe. Episode 2 covers debits and credits. So let's get started. What are debits and credits? Debits and credits are used in double entry accounting to record business financial activity. The double entry accounting system was created by Luca Pacioli in 1494. So you can see it's been around for a long time. Back then, Luca used double entry accounting to record transactions between businesses like merchants, bankers, and the like of his day. The core rule of double entry accounting is that every entry on the left, debit, must have a balancing entry on the right, credit. So think of double entry accounting as a scale. When we use debits and credits, we are balancing a transaction. Originally, double entry accounting was recorded in paper ledgers by hand. Today, we use accounting software like Xero that enables us to work anywhere in the world. So whilst a lot of double entry accounting is now automated, it's highly essential that any accounting professional or business owner managing their finances understands these underlying rules. So, why use double entry accounting? The main reason is to understand the profitability of a business. By recording transactions accurately, we can create reports that provide meaningful, timely data on business performance. Using double entry accounting, we can ensure accuracy is spot on and use a universal language of accounting that is debits and credits. So, now we understand what double entry accounting is and why it's important. How do we actually go about using the system itself? I'm glad you asked. Let's return to our scale analogy. Debits on the left, credits on the right. If a debit increases one account, it decreases another. So if a credit increases an account, it decreases another. A simple way to remember the movements of accounts is to group them. Assets and expenses increase with a debit. Income, liabilities, and equity increase with a credit. So when we're categorizing and recording business transactions, we debit one and credit the other. This is double entry accounting. So let's look at that again in a table format. If I wanted to increase the balance of an asset, I would debit that asset. If I wanted to increase an income account, I'd credit it. Try to let go of any memories of debits and credits you might have from other areas of life. Putting credit on your mobile or receiving a credit from the bank isn't the same thing. Wipe that slate clean and learn accounting debits and credits with a fresh mind. Assets and expenses increase with a debit. Income, liabilities, and equity increase with a credit. So let's dive into an example. A customer buys a product from your store. Think of the accounts impacted, and let's forget about GST for now. So, step 1 is thinking about those accounts impacted. In this case, the bank is getting $100 more, and our sales are going up by $100. Step 2, are these accounts increasing or decreasing? Well, in this case, they're both increasing. We increase the bank account, which is an asset, by using a debit, and we increase the sales account, income, by using a credit. The third and final step is to ensure that it balances. And in this case, we've got a $100 debit and credit, so we're good to go. Let's look at another example. A business owner pays for some stationery using their bank card. First, let's once again think about the accounts impacted. Stationery account, which is an expense, and the bank account, which is an asset. Step 2, are they increasing or decreasing? In this case, our expense account stationery is increasing, so we debit stationery expense $50. Our bank account, however, decreases by $50 to pay for the stationery. Therefore, we need to credit the bank account as an asset by $50. And lastly, we ensure that this balances and we can see we've got $50 on each side. So we're happy with that. So in summary, debits and credits are used to record business financial activity. Remember, this system was invented a long time ago in 1494, and the main rule is that debits and credits must always balance. We use double entry accounting to record business transactions so that we can generate useful reports and understand profitability. Thanks for joining me on today's episode, and I'll see you soon for episode 3.